So just quickly, I have to do the quick disclaimer. This is for educational purposes only. Nothing in the videos, Twitter stream, or anywhere else should be considered a trading recommendation. It's purely for educational purposes. Okay, guys, let's get started. This is for Monday. Let us jump into the bigger picture and what we're looking for here. And let's jump over first to the volume profile, and we'll work our way backwards as to what we're looking for. Let's get rid of all this. Okay, first thing I want to know is swing high, most recent swing high, and most recent swing low. I'm going to go with and open gaps. Swing low, swing high from above. This was done on, this spike was Fed day spike, right? The other key, what are the next key areas now? So now we have a defined area. Obviously, that's a large range. Last week's high and low, well, that's pretty straightforward. Let's see, Friday, 2, 3, 4, Monday's high. And again, I'd make notes on this. Okay, why is this 1969.25 important? It's important because if we don't get above it, there's really nothing bullish to talk about, right? In the bigger picture, you need week over week new highs in order to be in a bull market. We're clearly not in that bull market. Please note that there's an open gap sitting at approximately, because this is not the CME close, but approximately 1963, there is an open gap. And at approximately 1962, there is an open gap. Okay? These make key upside and downside targets, right? And the next question is it attainable? We close essentially at 1920. 1960 is doable. It would take a huge upside day to do it, but it's doable. 1962, probably not so doable. That'd be a 60-point down move. Stuff's gonna have to get pretty ugly pretty quickly, and we're probably gonna need some kind of driving force in order to make that happen. Okay. Next in the big picture, where are the 50-60 retraces? So let's format this real quick. Okay, right in front of that the 62 retrace is lining up just behind the open gap. The 50 retrace is opening from swing high, right? We have not been able to get anywhere close to it to this point, is 1955. So if we for some reason clear the 1941, 1942 area from Friday's high, that 1950 to 62 area becomes immediately attractive. 1950 is also important. There's a high volume node sitting right there at 1950, 55, open gap at 62, and then the 62 retrace sitting at 69. Essentially, how do we clarify it? This area, so where we're going to fix that, this whole area right here, that would be the limits of our upside target, at least immediately, right? It would be somewhere in this area. On the downside, where's the 50-60 retrace, and have we achieved it yet? Swing low, swing high. We closed right at the 50 retrace, which is right here at 1916. And the 62 retrace has moved up, right? It's now sitting at 1894. There's also is there an VPOC or an HVN? There's something sitting at 1894 that makes an important inflection point. Bill or one of my volume profile guys, if you'll hit me with what's sitting there. I know it's sitting there, I just forget what it is. But 1894 is an important number. It's a 62 retrace. I would not be surprised to see a reaction first time into 1894. Just keep in mind it's already been tested one time prior to making this new high. It's still a valid location, but 1894 nonetheless, I expect a reaction there, okay? And then below that, the open gap at 1862. 1880 is obviously an important area, 1880, 82. There's support levels all the way up and down, but this 50-60 retrace right in here, I'll mark that off here. And if you'll notice, that's essentially, let me see what they're saying. There's a naked VPOC at 1894. Again, I would expect responsive buyers the first time to 1894. Would not shock me for probably a backside test of 1900. Okay, So what does that leave us? So let's go through the notes again so everyone's aware. 50-60 retrace from essentially 1852 all the way up to 1969. Okay, I expect, generally speaking, some type of responsive sellers to show up somewhere in that very large area, right? Responsive buyers from 1916 all the way down to 1894. I would expect some type of attempt to push back up. If we get behind the 62 retrace, it is possible to make it for a retest of the lows back at 1821. But realistically, what's the probable stretch for the day, and where do I want to be looking for responsive buyers? I want to be looking for responsive buyers somewhere between 1890 and 1880. That's probably the stretch for the day. And there's a pronounced LVN sitting right there at 1881 that I would look for a responsive push back up for a backside test to 1900. On the upside, obviously the first time we get into the backside of this 1930, that was the overnight high. I would expect responsive sellers there. And again, at 1950, I would expect an attempt to rotate lower on stretches. So let's lower this down and then translate. Does anyone have any questions over the bigger picture? Going once, going twice, 3 times, sold. Okay, everyone understands. Key area above, key area below, and then we're unlikely to stretch beyond 1880 intraday. That's a 30-point stretch. That's been about capping us every day, unless we have an exceptional day between minus 20, meaning 1990 down to 1990 down to 1880. I am looking for an area to I'm looking for longs to push back up towards 1900 from those locations. Above, starting at 1920 all the way up to 1930, I'm looking for a responsive push back into the middle. Okay. And then one other thing to note from this chart, if we clean it all up, right? If this was an intraday chart, you would say something like this. Top of range, bottom of range, right? And again, remember this is daily, but pops above have resulted in pushes back in. Odds are pops below will result in pushes back in, and that we'll keep balancing into this range. Generally speaking, just like as if this were intraday or daily chart, in order to break out of the range, just like here, see how this is the midpoint of the range, is essentially 1940, okay? And see how we came down, we gapped out of that range, and then rolled to the bottom end. So there's essentially 3 points, top, middle, bottom. And generally speaking, a break of balance will be accompanied by a gap up or gap down. We do have a small gap, but the important part is that the gap is usually accompanied by a gap out of range. Since we're not having a gap out of range, it's still possible to have a trend day up or a trend day down, but my guess is we're going to end up with either this or we're going to end up with this, one of the two, as opposed to this or this today, because we're just simply opening within the range. We can come down and test into the bottom of the range, even extend out of it a little bit, and pop back in and close within the range. And that's probably what I expect to happen, is a push down, then a push back up, because what's been going on through this whole area, late sellers have been trapping themselves for a push back up, late buyers have been trapping themselves for a push back down, and now we're getting that action. This is where they trapped themselves last. My guess is this is the area they'll trap themselves next, and we'll kind of do this little tug of war in this area for a while now. Okay, let's go look at the bigger 15-minute chart. Guys, give me just 1 second. Oh, it's 1 minute to open, guys. Is that correct? Wow, time flies. Let me show you one more thing here. Okay. You may want to have this drawn out on your chart. That trend line and this trend line, these two have to be broken up to the upside in order to get any sustained upside, right? We're obviously gapping down to 1910. I would expect to push into the backside of this first time in to get responsive buyers. Again, I'm not bearish or bullish. I'm just looking for the edges, and I'm looking for it to get overextended at the edges. And then within that point, when we get to the zones, what I'm looking for additionally, tick divergence along with the swing indicator to kick in. And again, the areas I'm most interested in, 1890, let's call it 1894 down to 1880 for longs. And on the upside, 1820 to 1830 for reversals back to the downside. So that's my 2 cents for the day. And let's go have a great day. Obviously, first 30 minutes, we're going to watch. We are having a gap down, so we have to watch for the potential of open drive lower, right? And then rotation size, the other key thing, 10 points. I would have as my minimum, right? 20 points preferable. If you look at this from swing high, let's call it 1945, 1935, 1925. Notice at 1925, we get our first reaction. From 1925, we get another 10. Brings us to 1915, another reaction, right? And then if you look from this 1925, we get another 15 down, gives us 1910. So the rotation was 15 to 20, were the key rotations to the downside on Friday afternoon. I suggest we follow that, and I would keep an eye on the IBB all day today. It did not lead us poorly on Friday, and let's give them a chance to. We don't need more than one trade, right? Let's be patient, get our location, and nail it, okay? So that's all I got, guys. Let's go have a wonderful day.